Welcome back. We are here on Ether looking at the cryptocurrency market, and this is going to be my daily forecast for Thursday, March 25th, 2021. If you'd like to support our channel, you're welcome to hit the subscribe button down here in the corner, hit the like button and the bell button to see our newest videos, and you're welcome to join us over here at Ether, where you can follow our trades and even copy our trades. The link is down below. So we'll start by looking at the Bitcoin, and as you can see, we did rally earlier in the session and then gave most of those gains back, basically all of those gains back, and created this inverted hammer here, which is a really bearish shine. And when the market basically opened later on today, we got an even lower level here, and now we're trading at the 52,366. So we're right at the 50-moving average. It looks like it's still holding. We have pulled back here a little bit. However, technical indicators are looking dreadful for Bitcoin. So if we were to break the 50, then we could go significantly lower here in this cryptocurrency market. So if you look at the basically long Fibonacci retracement, we could see this drop all the way down to the first Fibonacci retracement, which is at the 41,714. Then we could drop all the way down towards the 50 Fibonacci retracement, that is at 35,500, give or take, and then all the way down towards 29,000. So this could get really ugly if the 50 moving average breaks. We could drop significantly lower. If we rally from here, then we will find resistance at the 20 exponential, at the 54K, and beyond that we go to 60K and beyond that. But at this current stage, technical indicators are looking dreadful for Bitcoin. We have had these major pullbacks towards the 50 moving average, and then we made basically higher highs after that. So let's look at Ethereum. So Ethereum has completely turned around. We have a crossing here of the 20 exponential and the 50 moving average, and we have not had a crossing of those moving averages. We have to go all the way back here. It's basically in October 2020 when this rally started. So that is a very worrying sign for Ethereum. Technical indicators at this current stage are, well, fairly mixed. MACD is very bearish. We're going underneath the zero, so it's becoming a negative trend here. Stochastic is basically crossing the signal line to the upside, becoming bullish, while the CCI and the RSI are becoming bearish. So this is a worrying sign. If we continue breaking down here, we could go all the way down to these previous lows, and if they break at 1277, we could drop all the way down to 1000. If you look at the Fibonacci retracements for this, the long, we could see that the first Fibonacci retracements were basically right here, where we had this rally, or basically pullback from here, which is, give or take, 1386. After that, we have the 50 right here at 1181, and then we have the 61.8 at roughly 1000, where we also have the 200 moving average. So this would most likely be an area where there would be significant support. But this is not looking really good, and not looking good for Ethereum. This crossing here could basically have a massive flood to the downside. Rallies at this point will most likely be sold into when we get close to the 50 or the 20 exponential. So let's look at Cardano. So Cardano has fallen towards the 50 moving average and then has basically pulled back. So the 50 is holding at this current stage. Technical indicators, they are all bearish at this point. If the 50 breaks, then we could have this drop significantly lower. If you look at the Fibonacci retracements for this, we can see the first one is right here at 0.95. Then we have 0.80, and then we have 0.65. So if the 50 breaks, then we can drop significantly lower. If we rally from here, we'll most likely find resistance at the 1.12, which is the 20 exponential, and after that we are going to test these previous highs at 1.45. But not looking really good for most of these cryptocurrencies, but in this case the 50 moving average is holding quite well. So let's look at Litecoin. So Litecoin has also dropped below the 50 moving average. We're also seeing this crossing of the 20 and the 50 moving average. We haven't seen that since basically October last year, and that is a fairly worrying sign. It's very similar to Ethereum, where we have the MACD bearish, stochastic becoming bullish, and the CCI and the RSI is bearish at this point. If you look at the Fibonacci retracement for this cryptocurrency, then we can see that the first Fibonacci retracement, which we basically have tested right here, is at 170, which we have also pulled back quite significantly. If this breaks, then we'll head all the way down to 146. And after that, we have all the way down here at the 123, where we also have the 200 moving average. So this could drop significantly lower. Rallies up towards the 20 and the 50 will most likely be sold into at this current stage. So it looks like for most of these cryptocurrencies that the winds of change have basically changed there. We are going in the opposite direction. We have had this massive rally to the upside, but now these moving averages are basically crossing, and that is a very bearish sign. So let's look at NEO. So NEO has basically broken through the 50 moving average and then rallied again. We're trading right underneath between the 50 and the 20 exponential. Technical indicators are looking very bearish at this point. So it was looking really good until we basically completely fell apart here. We're not trading underneath the 50, so that's an encouraging sign. And the 50 looks like it is basically holding. But break below the 50, that could open the door to 30, and then also the 200 moving average here at $23. So let's look at Dash. So Dash has completely fallen apart here. We are trading well below the 50 moving average. We are in the crossing here of the 20 and the 50, which will further increase this to the downside. So 150 could be on our next target, which is basically the previous highs here. After that, we can drop all the way down to the 200 moving average at $117. Technical indicators, they are all very bearish at this point. If you look at the Fibonacci retracement for this, we can see that we have crossed the first Fibonacci retracement right here, and also the second, and now we're heading towards 61.8. That's at 172. If this breaks, then we can drop all the way down to 150 and then all the way down to the 200 moving average if that is the case. So rallies from here will most likely be sold into when we get close to the 20 and the 50 moving average. So I hope you find this helpful. You're welcome to support our channel by subscribing, hit the like button above to see our newest videos, and you're welcome to join us over at eToro. The link is down below. Good luck and thank you very much.